Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good afternoon. Ira Epstein of Linn & Associates with your metals market update for this Monday, the 27th of March, 2017, about 3:05 p.m. Central Standard Time. And an interesting day. You know, the gold market got up to 1264, the silver got up to 1815. Silver's going to finish the day off near its highs. Not the gold market. It's going to be in the 1258 plus area. I've seen the settlement price already. And the dollar got hit. So what got into the metals? Well, I think simply put, the market is a bit nervous about this Trump rally that we've had since November that has carried a number of markets on with the idea of reflation, the idea that he's going to get infrastructure spending and all these things through. And the first thing that happened to him was, unfortunately, he failed on a health bill. Why he chose that difficult arena, I don't know. Why didn't he just go to the border? Why didn't he choose maybe even infrastructure, which everybody, both parties are behind? But he got his education. This man's going to learn fast. He knows who his friends are, who his foes are, who's got two faces on them. And he's going to reach across the aisle, as President Obama should have done, and say, let me invite you over and not have to worry about these right-wing Republicans that have been, if you will, a thorn in his side. And I think that's basically what you're going to see. But in the metal market, you know, it's worried. What if what he wants to get done doesn't get done? So that created the issue. Now, if we take a look at a weekly chart on gold, what you've got is the potential here this week to get a crossover where the 18-week moving average gets over the 100-week moving average. The green is the 100. That would be called a bullish crossover. And should it occur, the neat thing is that when that happens, it often means higher prices are coming. So I am looking hard at what gold does this week. A good close this week, you're going to drop, for example, in the 18 weeks ago, it's probably back in here. You just count, and it's going to be then having a higher value. Is it going to be high enough to kick it up 3 points? Well, if we take a look at this week and the week before, the difference in the points, 1204, 1197, about 7. 1203, 1194, about 9 points. So it's narrowing in. Now it's only 3. It might or might not be. It depends how strong, if the market closes higher for the week, how much stronger. When we go to a daily area chart of closes, no question you're in an upthrust. It began at 1200. Today's settlement is going to be 1258.80, so you can see that's right up into this range where it was just a shade higher a little while ago. You can see how the market on a bar chart has picked itself up, and when I put the swing lines on, to me the important thing is you got higher lows and higher highs. That's bullish. What would cause that bullishness to go away on this pattern? Taking out 1243.70. So from where the market's at, about $13 lower, round figures, if you get through that, that ruins this particular chart pattern. It doesn't mean it turns bearish, but it certainly ruins it. The 18-day average of closes is not support in this case because to get to it, you destroy the bull pattern. It does have upside bias. Well, where might resistance be? Right here, 1265.30, about $1.10 higher than today's high, so you're knocking on the door of that resistance. What about momentum? Well, you're in a condition that is overbought, not embedded. What does embedded mean? You know, I have a charting course that teaches that in great detail because I think it's one of the strongest signals you can get on a chart. And when the signal's lost, you get a big play out of it. It's a two-sided signal. But right now you're just overbought where both numbers are, for the first day, over 80 if this is how things finish out. When you get to the gold ETF, the resistance point is the upper Bollinger Band at 120.13. You got to 120.08. So for all purposes, you're knocking on the doors of the resistance. And like the futures, this market's trying to get its first day of overbought. Well, it's been overbought, but its first day where overbought can begin the conversion process to embed. The gold miners are just overbought. higher lows, higher highs. They too are looking to see, can they get a flip-flop of this where you get the crossover where the 18-day moving average of closes crosses over the 100-day. Don't have it yet, but it could be a very powerful signal. We then get to the gold-silver ratio, and for those of you that watch these updates, when the market got under this price, I said, we're going to have to move that and change it, and that's it. You now are back into the down thrust where silver is now stronger than gold until you get back over 71.07. Now, what does 71.07 mean? It means you'd have, at that point, have to brought in 71.07 ounces of silver into your little shop on your main street that sells gold bars or whatever and say, I want to convert these silver bars for a gold bar, and add to it the premium he would charge you for handling all that, and that's what you would be. But in the real world where there is no premium, that's all it would be, 71.07. Today it's down to 69.35, so you need less silver, therefore the silver is stronger than gold. And when we go to the silver chart, if you take a look, our upper Bollinger Band was 1813, the high of the day was 1815, and you're basically trading right at that upper Bollinger Band in an overbought condition. You'd been in an uptrend, higher lows, higher highs. I had even told my clientele that I thought that big support was going to come in right at the 1740s into the 18-day average of closes. SLV, well, if we take a look, the high today was 1717, the upper Bollinger Band 1716. Don't you find it amazing how the markets go there and they pause, same way it did here and here on these? You've got to learn how to work this. And in my charting course, I walk you through Bollinger Bands, everything. I don't skim over them. 54 chapters, each about 8 minutes long or so, that guide you step by step with. Not only do you see the charts I'm doing, you're doing them, and then in the morning I bring you in the real charts so you can see just how this is working, and I call off all these patterns for you. In the copper market, you got down to the lower Bollinger Band, 257, let's call it 257.55, rounded. Today's low, 256.65. You got through it by a bit and come right back up. Where's the resistance now? The combination of the 100-day average and the 18th. So what do I think the pros did today? I think they yanked in their shorts here. This market's caught in sideways action, so to speak, of the Bollinger Band top and bottom. It's not trending much. And if you believe, as I do, that the oscillator of slow stochastics, where momentum in price leads price, well, you're flat. And that's pretty much what I think is going on. In the platinum market, this market is still very much an attempt at a bull market again. Higher lows, higher highs. It got up, couldn't hit the Bollinger Band, pulling back to the first support area of the 100-day average. Under that, 964.20 is the next support level. And what you don't want to see taken out is 960.70. So you have a game plan. If you're going to be a buyer, you have ideas of stops. The trend is up and you're not in overbought condition yet. And the market that led this whole parade up is finally correcting, and that's the palladium. Day after day, as these other metals weren't doing anything, this market was just shooting up. So it's correction time. Maybe it'll develop what we call an embedded reading. It's not there. It's just plain overbought, in need of consolidation and a correction. It could even fall back here to get a good correction at 772.25 roughly. In the dollar index, you've got a bearish play. And I promise you, the Trump administration's happy with this. They didn't want the dollar overly strong. So because of the fact that healthcare couldn't get through, the market in its wisdom says, well, tax reform can't get through then. Maybe infrastructure, maybe everything he wants to do is going to be a real hard road. Let's take the dollar down and we'll buy the yen, we'll buy the euro and the others because America's not reflating. That's great. Part of the administration was to get that down. And you didn't just drop today. Got to remember, we were up in this 104 area back here. So we're dropping into new areas of lows, and I've been saying it to you now for a couple of weeks. I said, I realize the press keeps talking about the bull dollar. It isn't there. And now that interest rates have fallen back from 2.6 to 2, 3, and whatever the small fraction is on the 10-year, that's putting pressure on it. You're going to hear talk that if the economy can't pick up and if the budget can't get passed and other things, maybe the Fed doesn't go for that many more interest rate hikes. But what I'm trying to talk to you about is teaching you how to do what I do right here. And if you're looking for a methodology that you can learn simply, a couple of weeks, that's all. I'm not talking months, I'm not talking years, to master this. I believe that is the whole case. I believe that if you put in a few minutes a day, but let's assume you wanted to attack it and you put an hour a day into it, you'll complete the course and learn a heck of a lot in under a week. What if you put more time than that into it? A weekend, you sit down and you go through the course. Remember, it's not a race, it's all about learning. Well, you're going to learn the window envelopes. You're going to learn the all-important parts of the Bollinger Bands as we get in them. You're going to learn how to put in the numbers for the window envelope numbers. I teach you all that so you can apply them. Then you're going to see my methodology as to how I write, how I tell you to buy and sell, and then I'm going to reinforce everything I do every morning with a video. And that video is going to cover 40 charts, and it's not a race. I go slow through them. I'm going to talk each of the things that I'm teaching you. So you go back, you look at the videos, and I give you the data in your charts to match up with that. You learn, you're seeing what I'm doing first from a PowerPoint, then you're doing it, and you're going, that makes sense. Then you see how the chart formation comes on, and I walk you through that. Then in real time, word is real time, I record every morning the charts as the markets are open and show you how that's working out and where it's going. I used to charge for this a lot of money in my other courses. I redid this course completely this year. Finished the course up right around December, probably put 6 months into it, re-recording, doing everything. Scott to beginning to end, Scott free, if you will. No more DVDs, no more CDs, none of that nonsense. It's all an online course. You stop here, it tells you where you stopped, you go right back online with it, and away you go. Move everything back and forth, no worrying anymore. Is my DVD going to work? Is it compatible? This is simple. I don't care if you're working on an Apple, I don't care what you're working on. If you got a PC, it's going to work with it. The value just of my market information that you get with the course for 30 days is $60. The charting software is $100. The whole course, including the 54 videos, $89.95, and I'll bet you one on that. Because I've been raising the price of the course. Yeah, Christmas I had a great price, and I'm raising it, and I'm going to keep raising it. I'll give you $15 off. So all you've got to do is when you go to buy the course, enter the words Ira 15. How do you do it? If you're looking right here, you're seeing me, and you see an icon, you're seeing me then on a DVD, a video that's coming from YouTube. Click on it. You'll go right to the page, and it's got facts questions, everything you need to know to buy it. You'll see the coupon code, IRA15. If you don't want to do it that way, go to our website, www.iraepstein.com, under the word education. Click down, purchase the course. You'll see everything come up there. And of course, you can call my staff at any time. They'll walk you right through it. They'll be happy to. And simple, they can answer your questions. I'm Ira. Best investment you can make is you, not in these markets. Learn from it. I'm Ira Epstein. You have a good day.